Success is the ability to go from failure to failure without the loss of enthusiasm. Let me say that again. Success is the ability to go from failure to failure to failure without ever losing any enthusiasm of what you're doing. So say, for example, you're trying to study, learn how to trade. You spent months, maybe like weeks, months, maybe years. You're trying to build an account up. And then boom, the account just blows up. Boom, you make one stupid mistake. The account loses a lot of its value. But success is being able to go through all of the failures that you're going through in life, regardless of what they may be, and still put your best foot forward, put a smile on your face, be confident, persevere. That is the true defining characteristic of people that are successful. Keep on pushing, regardless of how beaten down the extrinsic things of life basically happen, right? There can be a lot of things that happen in life in terms of your failure, your success. Being able to keep pushing through regardless is success. All right. And with that being said, I started a podcast. So if you guys are interested, make sure you guys go and, the link is in the channel description below. It's called the Hamid Talks podcast. So in that podcast, basically everything that I'm doing is meant to make you guys better traders, and where we can grow and learn together, right? The podcast specifically, it's going to be a place where we're going to share lessons that we've learned, right? Obviously, I've made a lot of trading mistakes, and I don't want other people to make those mistakes. I also want to learn from the mistakes that other people have made so that I don't make them. And it's not just about trading. It's about everything under the sun in terms of, bettering ourselves and learning how to be better people, essentially. So that's basically what we're going to be doing with the podcast. I'm very excited. If you guys are interested, make sure you guys subscribe to the channel. Click the link in the channel description below. If you guys have any questions that you guys want to ask on the podcast, make sure you guys drop a comment under that video, and I'm going to basically answer every single question that we get. All right. With this video, we're going to talk about the SPY, the NASDAQ, the IWM, the dollar, and the 30-year bonds. All right, so let's get started with the video. So currently the SPY looks bullish on a daily chart, period, point blank. But the issue is that when they do make it look bullish like this, it's a recipe for disaster. Usually these bullish moves don't last, all right? But hypothetically, let's just see why things do look very bullish. And primarily it's because we got two closes above major levels. The levels are, we got two major closes above this yellow line, which is the 10 simple moving average. We got two major closes above 371.04. And we got two closes above this downtrend level that was acting as resistance. And now it's currently acting as support. All right. Yesterday, I was showing how the best case scenario for bulls would be a retest of 371 for a continued move higher. And currently that looks like what may end up happening. The only issue here, and this is going to be really, really fun, is once we do basically get a very, very strong move to the upside and we stop at resistance, generally what we've seen is a major move to the downside, right? So we've been seeing that time and time again. So essentially we have to see if this, basically everyone was saying, everyone felt like we were going to break above 380, 381, everything, right? Is this a recipe of disaster, right? So obviously things look bullish. They made it very, very difficult to try to be bearish, right? But that's the issue right now, is basically, are we going to fail at this level of resistance like we failed at every other major level of resistance? Or, right, are we going to break above, right? Because we have to take the trades that we're given at the moment, right? We were meant to go long at these levels of support, clearly. But now that we're getting close to levels of resistance, the only trades that you can make right now is, as we got closer to this level of resistance, could have bought puts, right? That is the highest quality trade to make at the moment, is buying puts into strength, because we're currently in a bear market. Makes sense to do that, right? Number two, say for example, we get a close above 380.5, we got major closes above levels of resistance prior, right? But those were also opportunities to load up into shorts. So once again, 380 to 383, major levels of resistance, but getting a close above those levels does not justify going extremely long, which is the issue currently. The only issue right now, right? And the only time where it is the most safe to go long is at levels of support. It is, as we can see, right? We're a few months into a major bear market, right? Cool. What we've seen thus far is basically every single time we've shown a lot of strength, it was a great opportunity to go short. What that tells us about calls and what that tells us about swinging long overnight specifically, right? That's the whole point of me trying to explain this. Swinging long overnight is only justifiable if you were to buy at support. It's not justifiable to do so on breaks of resistance. So because which is, well, I mean, it sucks, but I mean, it is what it is. You have to adapt to the market environment and look at what's been happening prior, right? So for example, over here, back on in August, this was a clear cut, beautifully painted bullish picture, right? What did they do? They ripped it down. Same concept over here back in September. Huge, great bullish move. We broke above 405. We broke above 410. It looked like we were about to break, retest into new all-time high, or break above 420, 430. Right? That's when we were trading. What happened? We ended up failing at resistance and having a huge red day. Right? Same concept. We're still within that same market environment, so we have to remind ourselves not to get overly zealous to the long side. To ground yourself, all right? Because once again, the only time it is safe to go long during a bear market right now is at levels of support. You cannot be trying to go aggressively long overnight on breaks of resistance, unfortunately. All right. So for now, 380.5. 380.5 is a good level to go short. We could take a look at the dollar. Basically, the reason why the stock market was stagnant like this is because the dollar found support. We didn't end up falling down to this trend line that I was talking about yesterday. We found support. But what is most interesting is that the bonds started showing a lot of weakness. All right. So if the bonds continue and have another big red candle and we start breaking down below 125, 124, but the stock market is still green, right? I was also talking about this yesterday. The best case scenario for us to make the easiest trade would be if the stock market and the overall stock market, basically the indices and everything, were showing a lot of bullishness, but the bonds were ending up breaking support. So what we want to see is if we can tap 380.5 tomorrow, but ideally if the bonds start breaking support, that would be an amazing opportunity to go short, in my opinion, to scale into longer term puts. Because we're using the bonds and the dollar as a gauge for the equities price. We're not using the strength or the weakness in the SP500 to trade, right? We're primarily using the dollar and the bonds. All right. I mean, at this point, truly, there's not much else to really talk about. We see the indicators really just messed up. The bonds are showing weakness, the dollar is showing strength, and the SPY is holding support. So that's not the best case scenario for the SPY, right? And overall, what we've learned is whenever the SPY is showing strength, you just scale into longer term puts and just be happy after a few weeks. That's it. Even if we do continue going up to 380, 383, the macro environment hasn't changed. Inflation isn't going anywhere. The Fed is still going to be tightening. So until the Fed starts printing money again, we're going to continue trying to make a soft landing. So for us to have a soft landing, we need to have these pops every time we make a new low, right? That's what a soft landing is. If we were just going to start capitulating down, it's not soft, right? A soft landing is letting people ease into the drop, and basically that's what is playing out, right? Until the Fed has to step in. But yeah, at the moment, the Fed isn't. So we just have to continue reminding ourselves that even if things look very, very bullish on a daily chart, we can day trade with the momentum, right? Intraday, but do not get fooled trying to swing long if the market shows strength. Yes, of course, we can break above 380. We can gap up above 380, 383, but the odds are on the favor of bears for something like this not to happen. All right. But aside from that, I hope you guys enjoyed today's video. Make sure to like, comment, and subscribe. I also, I'm going to try to, I post a video and then I don't look at the comments as much as I should until like it's too late. But essentially, I read all of your comments and it truly means the world to me that you guys are doing, like commenting, sharing your thoughts and being nice and everything like that. And I really, really appreciate you guys. So, yeah, man. That's it. I hope you guys enjoyed. Take care. I'll see you guys tomorrow.